Your time is valuable, so let's get right into the picks for 3 stocks I'm watching or buying in May 2019. Our first pick for this month is UNITEDHEALTH, ticker symbol UNH. Every few months, a new sector gets hit in the stock market, and pretty much all the stocks in that sector start to move lower. In the beginning of 2018, it was consumer stocks like PepsiCo and McDonald's. Then in the middle of 2018 was kind of when semiconductors started correcting and Chinese stocks started correcting. And then finally in the back half of 2018, we saw a lot of gaming stocks being hit and correcting. Well, now in early mid-2019, we're seeing the healthcare industry get hit and those stocks starting to correct, which is why UNITEDHEALTH made the first stock in my list today. If you're not familiar with what the company does, they're a healthcare company that provides healthcare products and insurance to consumers. They're a Dow component and an S&P 500 component as well, and they employ over 300,000 people, so their footprint really is massive. Stocks like this don't drop very often, especially at this rate, so when they do correct, it is worth taking time to look into. Now, the reason why UNITEDHEALTH dropped along with all the other stocks in the healthcare space was because of one tweet. And no, this tweet was not from Donald Trump. This tweet was actually from Bernie Sanders. As you can see, it reads, "Our message to Steve Nelson and United Healthcare is simple. When we are in the White House, your greed is going to end. We will end the disgrace of millions of people being denied healthcare while a single company earns $226 billion and its CEO makes $7.5 million in compensation." So essentially, he attacked not only the company, but he also indirectly attacked the industry and directly attacked the CEO of this company as well, which is why there's a lot of pressure put on UNITEDHEALTH along with other healthcare stocks. This is a perfect example of fear setting in and people starting to panic sell their stocks because now if Bernie Sanders does win the election, then all of these stocks supposedly will get hit drastically. So investors are panicking and they're selling out now so that if this does happen in the future, they don't have to suffer the losses. In my opinion, that's kind of backwards thinking because now you're sustaining these losses, selling when the stock has corrected, and the stock will most likely, in my opinion, recover to probably higher than it was before this tweet came out. Looking at fundamentals, UNH here currently has a PE of around 17, which is well below the market average currently. They also pay out a dividend of around 1.5%, which does bring in some dividend investors into this stock. Now, throughout 2019 and into 2020, analysts are expecting UNH to grow its EPS by double digits year over year, which when you look at their PE of only 17, seems to imply that the stock may be undervalued here at this price. Targets may be set high, but when you look at their history, the company does a good job of beating on EPS and rarely has a miss with revenue as well. So a double-digit growth in EPS throughout 2019 is quite possible here with this stock. And analysts also see around a 25% upside from current prices, bringing it back to where the stock was sitting at its highs back in November 2018. And taking a look closer at the charts here, we can see that we're currently hovering around the 100 moving average on the weekly, and we're trying to break past this. If we aren't able to do this and we're not successful and the selling continues, I believe we may see UNITEDHEALTH near the $200 mark, as that is where the weekly 200 moving average is and where the 100 moving average is on the monthly as well. This implies that there's very strong support at these prices if we do come down to these levels. So let's see how these healthcare stocks do in the month of May. It's not just this company, it's a bunch of other companies in this space. So take a look at all the companies in this industry because you might find some good value there. And we'll have to wait and see how this shapes up for the rest of 2019. Our second pick for this month is BAIDU, which is a Chinese tech company, also known as the Google of China. They are a well-diversified company and they have tons of other segments apart from just its search engine in things like artificial intelligence for use in things like self-driving cars as an example. They own cloud products, voice assistant, but their most famous service, especially to Americans, especially those who trade in the stock market here on the American exchanges, is a company they own called iQIYI, ticker symbol IQ. Now, IQ IPO'd last year and was all the rage when it came out. You know, everyone called it the Netflix of China. So you can see that by owning this company, BaiDu is also in the video streaming game here as well. And IQ is doing really well. They added 36.6 million subs in 2018 to reach 87.4 million by the end of 2018. Comparing this to Netflix's base of around 159 million subs, IQ is already more than half the size of Netflix in subscribers, and this will only keep growing as it keeps expanding in China. Remember, China is a country with well over 1 billion people, but let's just say a fraction of that, 250 million people choose to subscribe to IQ, that's still drastically higher than what Netflix's current subscriber base is. Okay, so Baidu, like I said, is well diversified, but why am I looking at it specifically here in May? Well, currently the stock is trading at a PE of under 15, pricing it like a company that does not have any growth left in it. Typically, companies that have a PE in the teens are your boring, safe stocks, not a high growth stock like Baidu. So right away, this caught my attention here because this could potentially be an undervalued stock currently. However, the one concern here to be aware of with this stock is that competitors like Alibaba and Tencent are eating into Baidu's share, Baidu's piece of the pie, and this has investors worried, which is why the stock is doing considerably poor compared to other Chinese stocks. So keep that in mind. Baidu's market share, although it is pretty large still, is being reduced by these competitors, so it is something to keep a close eye on. Okay, so their PE caught my attention, so I decided to look more into the stock, and when I looked into their earnings and earning estimates more, this completely shocked me. Baidu is expected to report an EPS this upcoming quarter that is down 56% year over year, and although EPS has been dropping in previous months, we have seen signs that the Chinese economy is starting to do better and recover. So I think that this may actually be an exaggerated downplay here with Baidu, and Baidu may actually come in with a pretty decent beat in the quarter. And this is even more reassuring because if we look back even a few years ago, you can see that Baidu consistently beats on its EPS. So I think we may be in for another beat here as well this quarter. So the PE is pretty low in my opinion. The expectations are set pretty low. But what do analysts think about this stock? According to tip ranks here, analysts see around a 20% upside, and I think that this is actually underestimating Baidu, and we will look at their charts here to see exactly why. So over the last year, Baidu has corrected around 45% from its highs, and currently sits closer to the low end of $155 rather than the high end of $285 per share. Its current price is around $170 per share as of recording this video. And by just looking at the charts here, I feel it has sold off too far, too quick, and is bound for a pullback to at least a $200 level to test the 200 moving average again. This is of course considering growth in China continues and that Baidu continues to post decent quarters quarter after quarter. And in my opinion, it doesn't really have to be any blowout quarters, they just have to consistently meet or even slightly beat expectations. So I think at these levels it's very hard to pass up on Baidu because it does provide a lot of value here seemingly for what it's worth. A lot of its competitors, a lot of its peers, a lot of Chinese stocks are trading at insane valuations even after correcting. So if you're looking for some Chinese exposure, it may be worth looking into this stock. Now our third pick is a company that has had a lot of traction in the last couple of years. And any investor that's into growth stocks either has exposure to this already or has considered opening up a position in this at some point. This company is called Square, and the reason I picked this company is because the stock has really gone out of favor over the last few months or so. And as a result, it gets me interested and makes me want to look into the business more because my mentality is that just because investors think that it's out of favor right now does not mean that the company has stopped growing. Square, if you're not familiar, is a payment processing company where they allow merchants to use their products to allow customers to pay for products using their phone or credit card. This has been a huge success with small businesses as it enables them to accept payments other than cash and thus increases their customer base. Now, if you're not familiar, I'm actually based out of Toronto and I go around to these random food markets or clothing markets, and a lot of these vendors use Square for their payment, which shows me that it really caters to those small businesses, these kind of mom and pop shops where they don't really want to go with the traditional method because they're going to be paying tons of fees with those methods. And I personally don't really carry cash around with me, so it gives me an option to actually purchase these products using my credit card or my phone when they have that Square platform in place. They also have a competitor to PayPal's Venmo, which is an app to send and receive money, and their competitor is called the Cash App. Back in December, Square said the company had around 15 million users on the Cash App, so I expect this number to be closer to 20 million in this upcoming earnings. And I'm sure there's going to be a lot of eyes on this to see how this part of the business is growing, because PayPal actually just announced that they have 40 million users on their platform, so Square really has a ways to go to catch up to the competition. So why Square right now? Well, unlike Baidu or our first pick, UNITEDHEALTH, it doesn't really have a PE at all because it's not a profitable company yet, so it's not really a value pick. And unlike Baidu, expectations are not very low either. Analysts are expecting some pretty good results here in Square, more specifically a 46% growth year over year in EPS. And if you look for the rest of 2019, it's also projected to have high double-digit growth there as well. But when you look at their numbers reported the last few years, they have consistently beat on EPS and revenue, always outperforming and striving for the best results possible. And this is why I really like the company. This is why I think that they have a very strong drive to succeed and to continue growing the business with incredible growth year over year. Analysts see just under a 20% upside in the stock, which is fair, but still is well below its all-time highs, which we did hit recently. And jumping over to the charts here, you can see this a bit clearer. Back in December, when the market corrected, Square super corrected with a 50% dip in a very short period of time. Since then, it has recovered back to around $75 per share in less than a month, but since late January, it has pretty much been hovering between the $70 to $75 range, just waiting for some catalyst to move it higher. And that catalyst, in my opinion, may be its upcoming earnings report. And I think after this healthy consolidation period that Square has had, regardless of how the earnings goes, as long as it's a beat and their guidance is good, the stock is going to be ready for its next leg up higher. So if you had to pick one of these three picks, hypothetically, which one of these three would you pick? Let me know in the comment section down below, and don't forget to subscribe if you're brand new to the channel. I appreciate you sticking around to the end of this video. If you want to check out another video or two, I'll leave a couple over here on the side. And if you're interested in viewing my personal portfolio, how my portfolio is doing, what positions I have a link in the description to the VIP membership group, so check that out. Either way, thank you so much for watching. Hope you found value in this video. Don't forget to invest positively, and I'll see you in the next one. Peace. Oh, and don't forget to drop a huge like on this video as well. Peace.